Is Indexed Universal Life, or IUL, a ticking time bomb in your financial portfolio, or is it the right aligned instrument to be using towards your goals that you have financially? So here's a few things you need to understand, a few questions you need to ask to see if you already have one, if it's in alignment, or if you're thinking about getting one, if it's in alignment with where you're at and where you're trying to get financially. So a lot of people think that IULs are so amazing because of how they're advertised, and I often find that there's a lot of things left out of the discussion when you're sitting down with an agent. There's a lot of things left out of the marketing that when I sit down with clients that have them or are considering them, they don't know these things. They have never considered these things. They've not been educated in them. So this is for you to be armed with so you can make a good decision on what you already have or what you're considering to get. So there's different ways to fund these policies. There's different ways to manage these policies. There's risks associated with these policies that you need to be aware of. You can minimally fund these policies, which I find most often, which puts you in the potential danger zone of these policies lapsing later on as internal charges go up based on your mortality. And because it's annual renewable term, there's just these internal costs that can start getting away from you if there's not enough cash value growth to keep up with the internal policy charges. So minimally funded can work, but you have to manage it and monitor it ongoing. There's target funded, which means it's the guidelines that the insurance company has set. It doesn't mean it's guaranteed to not lapse, but it's more of a ideal scenario based on what the insurance company's opinion is of how things are set up. And there's maximum funded, which means you're putting in the most cash value and premium that you possibly can to basically fulfill the window that you have between the death benefit and the corridor with cash value. And that is a very ideal way to fund them if you're wanting to stay out of the danger zone. But I don't find very many people even know to do that. There are risks with these that you need to manage. Is the cap rates going to change? Are the participation rates going to change? What about the index that it's linked to? Is it a proprietary index or is it the S&P 500? Oftentimes in illustrations, proprietary indexes are used, which means the insurance companies handpicked different indexes, different stocks, different portfolios that look really good in back testing, but may not have a proven track record, moving forward. There's a risk there, right? So all of these things you need to make sure of that you are able to manage them, or if not, your agent is. Several years ago, I had someone very high up in a network marketing company come to me, and they had one of these policies, and the agent that they had set it up for them, it was a very large policy because of how much they brought in. They brought in, 6 figures a month, I think it was. So making very good money. But the insurance agent passed away tragically, and they could not find somebody that was educated in how to manage all those moving levers with the policy. And it eventually lapsed because it was minimally funded, and they didn't know what to do. And it was going to take $12,000 to reinstate the policy. And they opted not to do that because the policy hadn't performed up to the original illustration or how the salesperson had, portrayed it to be. So they went a different direction, of course, right? They didn't want to continue the IUL. They were okay forfeiting, I think close to 6 figures that they'd put into it, or maybe mid 5 figures. I forget the exact numbers now. It's been several years. But those are things that you have to manage. So if you're okay managing every single year, making sure that you're nowhere near the danger zone of the IUL lapsing, that's good. If you're okay with managing the participation rates and the cap rate changes, because typically most IULs, the cap rates come down over time. They give the best cap rates to new policyholders, and the longer you've had the policy, they begin to lower it and lower it and lower it because there's not usually enough money to go around to meet all of the policy promises and what they're trying to do with the cash value growth, of course. So these are things you just need to be aware of. Now, you may say, Jeff, I'm totally cool with all the things that you're pointing out. I'm aware of these things, and even if I'm not, I can handle that. I've got a great agent. Perfect. It's aligned for you. It's the right tool for you. However, I come more into contact with people that are already overly invested in the market. And I know this because they tell me so, based on how much money they want to have between safe assets and risky assets. Most people are 60, 70, 80% in the market, if not more. And these people are more saying, you know what, I don't want to have that much, and I want to have some safe assets. And IUL, Indexed Universal Life, falls in the risky bucket, where it's not considered a safe asset. as much as other things like bonds or things like whole life insurance or there's only a few safe assets, right? CDs basically. Those are generally considered those types of safe assets. So if somebody is wanting more safe assets in their portfolio, index universal life may not be in alignment. A lot of people are wanting more of a bond alternative. They're wanting something that is stable. They have guaranteed growth in it. They have control and flexibility. They don't want to have to risk losing the policy. They don't want to have to risk losing the money that they've put into the policy. They want to know that it's there doing what it's supposed to do. So if that's more in alignment for you, then maybe something like dividend paying permanent whole life insurance with a high cash value is a better option. Maybe none of those are the best option for you. But you need to make sure that what you're doing with your money is in alignment, because if you're using an indexed universal life as maybe college savings for your children, and you're not managing the risks of that policy and keeping it max funded, there's a chance by the time your child is ready to go to college, that policy has lapsed, or it's going to take a lot of money to reinstate it or keep it going from going into lapse, right? That may not be in alignment for you. If you've put in 5 or 6 figures into this policy over your working years, and you're expecting 6 figures of tax-free retirement income every year, and by the time you're in your 50s or 60s, that policy has lapsed because maybe the stock market hasn't performed very well for a number of years, and the policy charges internally have exceeded the cash value, and the policy has lapsed. That is a possibility. Maybe there's no guaranteed riders that keep it from lapsing on your policy, and you lose all the money that you've put in there because maybe you're not managing things, you didn't know about it, your agent isn't up on those things. Those may not be in alignment for you. You may not want to use that instrument for that type of retirement income. These are just questions you need to ask and make sure they're in alignment for you. So if you have an indexed universal life product and you want a second opinion and you want somebody to point out the things about the policy, go through and do an audit of the original illustration and an in-force illustration, which is more of a current synopsis of what the policy is doing, its performance, how it's structured, how things are allocated, the growth up until that moment in time from when you first started it. So you can really understand the policy that you've got, and you can understand if it's in alignment with where you're going. If you want to have somebody guide you and hold your hand through the process of understanding what's in alignment for you. Maybe you don't even know. Maybe the agent that sold it to you or your advisor has never taken the time to truly get to know you and where you're going and what you're trying to accomplish to know if Index Universal Life is the correct instrument for you. And if it is, great. That's awesome. But let's make sure that you have confidence in the whole process and you have confidence in where you are and where you're going, and knowing that this is an aligned product for you. Now, if you're considering an indexed universal life and you've heard the hype, like I have clients on client calls that say, Jeff, what about indexed universal life? I saw an ad on TikTok or on Facebook that I can get 29% a year in that. It's like, okay, that is true. They do perform well, right? They can get you that. However, is that going to happen every year? Is that guaranteed? Is that in alignment with the amount of risk you want to have? And usually when you ask those questions, they tend to go, oh, well, maybe not, right? And then when they understand the mechanics of the policy, they tend to have a different opinion, right? Once they're armed with the information. Now, some people are still going to say, yeah, I want that, right? I've got enough income to go around. I have an emergency fund. I have an opportunity fund. Maybe I have whole life insurance already, and I want this indexed universal life to be a complement to that and be a little bit more of the kind of hybrid between whole life and having money in the markets, right? Because usually IULs do protect you to some degree of market losses, but you're not taking as much of the upside. So maybe that is the right fit for you, and we can look at the options that are going to be best in alignment to do that for you. So if you need that guidance, click the link with this video. There's a link there that you can schedule to do a discovery call and a strategy call, and we can really look at your situation and look at what you've already got or what you're looking to potentially get with an IUL, and make sure that there's that alignment and you feel really confident about your decision moving forward, so that you can go and live your best life and serve people through your passions and your purpose and what you're ultimately here to do. So thanks for watching, guys. If you have any questions, comment below with the video, and we'll talk to you soon. Take care.